All right, traders, so the stock market has officially exploded. I strongly believe that the market has officially flipped. I strongly believe from a macro perspective that the SPY has potentially bottomed out this year. I strongly believe stocks are extremely oversold and they have huge upside potential. With that being said, from an overall price action point of view, from a technical point of view, from a macro perspective, the market has flipped. I think stocks can rise substantially. For the micro, I think we're going to see some flip-flop. I think we're going to see some choppiness. But from an overall point of view, in terms of where prices are heading within time, if you're patient, it looks like stocks are going to be on track to rise substantially. Do I think they're going to get new all-time highs this year? No, I think they're going to continue to rise within time, and there's going to be some sideways chop, and there's going to be some micro flip-flops along the way. But this is where I currently stand with the market, and I did address this in yesterday's video. I was explaining to you guys in yesterday's video how if you look at the VIX, whenever the VIX has this, massive run up, and this is going to be very important because take a look at this. Look at the high on the VIX. The high on the VIX was on March 18th in 2020, and then it got slaughtered. And take a look at this. The low on the SPY right here in 2020 was on March 23rd. And we're currently in March. So what does this mean? This means that we're beginning to see a repeat of history. I remember in 2020 when the market reversed, and I'm telling you, in terms of the price action and how stocks were moving, they were moving just like this, where these big companies like BIDU were going up 39%, like Alibaba was going up 36% on the day. This type of price action, I'm telling you, this is like a macro flip. This is the type of flip. Where SPY has bottomed, where stocks have bottomed, and they're going to continue to rise substantially within time, not saying right away. For the micro, there could be some chop, there could be some sideways price action, there's going to be some flip-flop along the way. But from an overall perspective, it does look like now is going to be a good time to consider some leap calls, to consider, buying some stocks for some, midterm investments. With that being said, I'm going to be explaining to you how I'm planning to adapt. For those of you who followed this channel since the beginning, you are well aware on some of the technical strategies I've used to buy SPY put options when it was trading at the all-time highs. And what I'm seeing right now in the SPY is I'm looking at 2020 and it's screaming, this is like 2020 all over again, where we're going to see, stocks rise very, very nicely and sideways chop. Do I think we're going to get new all-time highs anytime soon? Not at all. But with that being said, it does look like this is a macro flip. That's what it looks like we're currently seeing. One of the reasons why I so strongly believe that, I was showing the comparison with 2020 in terms of the timing, like the SPY literally bottomed in the March. And we spoke about this in yesterday's video. It's the VIX, guys. Look at the VIX. When the VIX has this massive run up from $17.30 to $42 in just 2 months, when it forms this death candle, this is the candle of death. When you see a candle like this on the VIX prior to having a massive substantial run up, that means we're looking at a major trend reversal where the SPY is going to run. So in a sense, this was highly predictable. And I mentioned this in yesterday's video. So with that being said, that's where I currently stand. It looks like the market could have potentially bottomed. I mean, one of the variables that's going to determine that is what ends up, happening with this war, if there's going to be a World War III. But I mean, other than that, this is really beginning to look like stocks are going to continue to rise. And I remember that price action in 2020. And when stocks started having these massive moves, like when Alibaba, I just remember like when stocks had these massive gap ups towards their oversold point levels, these massive unreal price action moves where the calls were going up like, 5,000%, 10,000%. And in terms of this March timing, I specifically remember that was the bottom of the market. And the way stocks are moving right now, they are showing signs of a bottom. They really are. They're showing signs of a macro bottom here. So that's where I currently stand with the market. That can change as time goes on. But in terms of right now, that's where I'm standing from a macro point of view. So it's really time to adapt and it's time to adjust. And like I said, the VIX gave it all away. When you see it have a massive run up, so like right here in 2020, it has this massive run up. Where's the candle of deaths? Where's the end of the VIX? Right here. This is a candle of death. These two candles right here. And then it just gets slaughtered. The same thing just recently happened, and the timing was very similar as well. This is the candle of death on the VIX. You can see right here, it even had like a gap close reversal. There's a gap to fill on the VIX right here at $42. It nearly went to 42, filled the gap, and then it just gets slaughtered. So that's some of the confirmations that I use, looking at the charts, looking at the timing, looking at the history, looking at everything from a technical view. It is screaming that stocks are going to be very, very bullish. And there's going to be a lot of people who don't adapt, who are buying puts that are going to get hurt, and they're going to give back their past month's profits if they don't start adapting. So with that being said, in terms of adapting, that doesn't mean that you have to buy calls and play the call side. That means you have to sit on the sidelines and you just have to wait for the truly best opportunities at the best prices, trade a lot less if you're going in on puts right now, and wait for the best key levels to trade puts for a quick micro trade where you can do very, very well. So in terms of where I stand with put options right now, it's going to have to be the highest quality setups at the best prices. So I'm going to be looking to be trading a lot less moving forward, because this is something where I have to truly adapt as a trader. Because like I said, for the past month, for the past 40 days, I've been on this crazy green streak. It finally ended. I had a small red day. My portfolio was down 1%. My trading portfolio, I just made some quick, I'll recap them towards, the end of this video. I just made some quick day trades. I had a quick put option on DI, just in and out for a small loss. It's a good thing I got out because those went down 40%. And then I had a quick small loss on CLV, just in and out on puts. I didn't play any SPY puts. I didn't do any heavy position size or stuff like that, because if you guys watched the video from yesterday, I told you guys the market is looking very, very bullish. SPY looks very, very bullish. VXX looks extremely bearish for the micro. Looks like the market wants to pump. Important updates on how to adapt moving forward. So I addressed this in yesterday's video. But yeah, my other portfolio with the Leap puts, that did take a hit today. I'm going to be going over that too towards the end as well. But guys, moving forward, as I'm adapting to this, because I've been really killing it, for the past nearly 40 days, this green streak was truly crazy, and it's mainly been on the puts. So we're starting to see this trend where the macro is flipping for the call side. So I have to start adapting now. So when you're making that adjustment, you don't want to be taking any big position sizes. You want to be more observant. You want to sit more on the sidelines. Don't rush into anything. And what I would suggest is focus on overreactions. Only focus on the highest quality setups, the overreaction. So for example, let me show you a very good trade idea. And I mentioned this in the live stream. I didn't take action on it, but I did mention this idea in the live stream. So, Powell came to speak at 2:30 p.m., right? And you know what he likes to do? He likes to pump the market. So the SPY had a massive micro crash before he came on and started speaking. The SPY went from 430, 455, and you guys remember that gap fill I told you on SPY, one of the best prices to buy puts on the SPY was that gap that's waiting to fill above right here. As you could see at $435.71. There's a gap to fill right here. It filled today, big downside potential level, right? And you can see the high of day at the time being was at 434.55. So the SPY partially filled the gap, and then it had a massive sell-off. So that's a massive drop. It went from 434 all the way to 424.75. This literally dropped 10 points in a couple of hours. So that's what we call a micro overreaction. And we know, with that being said, from a technical view, if it fills this gap and reacts to support, we're going to see a micro reversal and SPY is going to start to pump up. But then another thing, and then this is why the news matter. This is why you got to be aware of the market as well. So we know that from a micro perspective that SPY had a partial gap close reversal. It had a massive sell-off very, very quickly, right? So there's going to be a lot of fear. There's going to be a lot of fear into the selling here, right? And that's the time to buy when others are fearful. And there's going to be a lot of fear within this dip, within this massive sell-off. So with that being said, when Powell comes on and speaks at 2:30 p.m., you look to buy calls and play the gap close reversal as soon as it starts breaking out above this gap close reversal level here at 426.17. You pick up some calls when it reacts to support and ride it back up. That was a killer trade idea. I just didn't take advantage of it. So I got to readjust to the call side. I got to focus on overreactions like this, where SPY has a massive gap up. It comes back down to fill the gap below, and then it starts reacting as support. And the icing on the cake is when, Powell came on and he started pumping the market with his, magical tools, right? That nobody knows about. But with that being said, that's one thing that I wanted to address on the SPY. And in terms of the SPY moving forward, in terms of tomorrow, the key level 435.62. That's going to be the key level. If that reacts as a support level, the SPY is going to pump. It's going to pump hard. We're going to be looking at 446.60 possibly by Friday, if not the next week. If 435 cracks and reacts as a resistance level, we're going to be looking at a little pullback to 430. So I want to see how it reacts at this key level. If it reacts as support, it's going to remain bullish for the micro. If it reacts as resistance, it's going to remain bearish for the micro. From a macro perspective, SPY is at least going to go to 446.60. There's a gap to fill at 446.60 from a macro point of view. It's definitely going to be going there most likely by next week. A killer trade idea would be is if the SPY can fill this gap at 446.60 on Friday and show signs of resistance, show signs of a pullback, the put options should print substantially. And that's something I would look to go slightly out of the money on. So a killer trade idea that I have on the put side is when SPY hits 446.60, the sooner the better, because it'd be an overreaction if it was sooner, because this was at $413 in the pre-market. Insane. The market is on fire. And with that being said, if this can hit 446.60, hopefully on Friday, it's going to be a great opportunity to buy put options with the stop towards like 448. I do believe those are strongly going to print. Just take a look at this candle. It went from 446.50 all the way to 436, and then you can see it had so much downside potential. So I'm telling you guys, I just gave you the best level to buy puts on SPY to short the SPY. That's going to be the best level. That's what I'm going to be looking forward to. In the meantime, it's gonna just continue to try to pump. There could be a micro flip-flop, but overall, from a macro perspective, SPY is definitely bullish until 446.50. That's where we could see a macro flip as well, not just a micro flip. But in terms of the macro right now, everything is really bullish. That could change, though, at 446.50. It could, not just for the macro, but for the micro. Not just for the micro, but for the macro. So that's what I want you to keep in mind. So that's a key level that I'm waiting for on the SPY moving forward. So as I'm adapting, as I'm adjusting, I'm going to be looking for just big overreactions, and I'm going to be looking to trade a lot less instead of to trade more. I've been trading a lot more than I often do lately because there's been great opportunities, but I'm telling you, now's the time to take a step back. Now's the time to scale back in position size a little bit, be more observant, be more aware, be laser focused on just the best setups at the best prices, and trade a lot less. We truly have to start adapting because, guys, this is looking very, very bullish from a macro perspective. I just want to show you some daily charts too on how, stocks are extremely bullish as well. And we called out like some of these key levels too, like the gap close reversal on SPY. I said the best price right here is at 416.25. This was literally the bottom. I was scalping SPY calls on this day, literally at the lows. And we also talked about Shopify in the watch list. When Shopify goes above 520, it's going to start to push up to fill this gap. And now it's above that. So looking at the daily charts, these stocks look extremely oversold and they look very, very bullish. Do I think the SPY is going to hit new all-time highs? No, I think the SPY is just going to be like a sideways chop and just gradually kind of go up with the uptrend. But stocks are going to really start pushing. Stocks are going to be the play for calls, in my opinion, not the SPY. I would be focused on calls on stocks rather than calls on SPY. That's what I would be focused on. Look at some of these charts, like the chart on a DocU. It's just extremely oversold. There was a gap to fill here towards $78. There's gaps to fill above, gaps to fill above. It's just so oversold, huge upside potential. Look at Pinterest. Pinterest is another one. Pinterest right here, pins. So this one had a gap to fill right here. There was a gap to fill at like $24.24, right around there. You can see the gaps. It looks like it's starting to see signs of a very bullish reversal to continue to go up. Look at PayPal. PayPal is looking very, very bullish as well. Bottomed at key support, key gap fill levels. It had that massive breakout we talked about in yesterday's video. When it goes above 100, it's going to rocket. Same thing we talked about in yesterday's video. When it goes above 100, it's going to rocket. That's starting to climb back up and fill the gap above. Another one, this one I'm just waiting for puts on, is going to be CAR. So CAR has a gap to fill above at 305, and CAR also has a gap to fill above at 357. When it can get around those levels and react as a resistance, I'm looking at some micro puts. I currently have no interest moving forward with macro puts, that can change if the SPY has a very negative reaction at 446.60 on the daily. But as of now, for the macro, the calls are going to be the ones winning from the macro perspective. In micro, we have to be extremely laser focused on truly just the best setups, especially, you know, both ways, like both ways. We just have to do it both ways. Rivian is looking extremely oversold with nice upside potential. There's a lot of them. Roku is another one. There's a lot of stocks right now that are looking extremely oversold with nice upside potential. Another one that I wanted to point out was Tilray. Every now and then, Tilray likes to have these massive spikes within time. And I wanted to point out this gap. There was a gap to fill on Tilray right here at, let's see, it was at like $5 and yeah, like $5.70. See, it has big upside potential at 570. This gap to fill right here. It started to bottom towards, that was the wrong one, my bad. It was this one right here. There was a gap to fill on Tilray right here towards, let's see, it was towards $4.90. There was a gap to fill right here at 490. Key support, big upside potential. Look at where it bottomed. It bottomed in the 490s, and it's been ramping up ever since. So I'm showing you some potential options that I'm looking into for kind of buying and holding stocks for like a nice macro flip, whether that takes a couple weeks, whether it takes a couple months. That's something I'm going to be looking into moving forward. But yeah, the SPY is extremely bullish. Stocks are extremely bullish right now. One stock that kind of is drifted away from SPY that looks bearish and is at key resistance is Walmart. Walmart is looking very, very bearish. So I'm going to be keeping an eye on this for a potential put. You see it has key resistance right here. It's forming the bearish candlestick right here. So what I'm thinking on Walmart is I'm thinking like a midterm put where we just kind of ride it out. And then when we're up and it's at a key level, we just lock in the profits. So another thing, guys, with leap options, when we're up and it has an overreaction in our favor, so like for example, right here, Walmart has resistance right here. Let's say, okay, it has the bearish candlestick. It looks bearish. It's towards resistance. We're going to buy the puts on this day. If it has an overreaction, this is an overreaction. See how it has the big red day the next day. The strategy works. If it has that, we take profits. We get out, we take profits, and then we move on. And if it pumps back up, it looks bearish again, then we get out, right? That's what we're going to do moving forward. I'm not looking to, you know, be patient and try to milk these options, to milk these big wins. That's how you give it all back. I've made that adjustment with trading. I used to, you know, aim for bigger wins with trading with like half my size or even full size. And I would give away all the profits. And then sometimes it would turn into like a nasty red trade because you get emotional within that trade. So with that being said, guys, let's trade the best setups at the best prices. And when the move happens and when we're up and it's an overreaction, like this is an example of an overreaction, we lock in the profits and then we just move on. If you're very confident it's going to continue to go in your favor for the short term, leave on no more than 25%, no more than 1/4 of your position, lock in like the 75%. That's what I would say about that. But overall, we just got to lock in the profits. If we lock in the profits, we'll be fine. I'm telling you, the people who are aiming for the big wins, it's not worth hitting. Remember, the big win is not worth hitting because when it doesn't hit, you're going to give back all your profits. And sometimes you'll turn that into a red trade, which could be a big red trade. So just keep that in mind. A big win is not worth hitting. What you got to do is we got to lock in the profits when the overreaction occurs, when it works in our favor. If you're very confident it's going to continue to go in your favor, leave on 1/4 of your side. That goes for day trading, and that also goes for the leap options. I'm going to make that mind shift adjustment with the leap options. But yeah, that's where I currently stand. That's where I'm currently looking at. So we're just really gonna have to see. So right now, it's mainly just a waiting game for me. I mean, I am interested in Walmart, but it's mainly just kind of a waiting game, guys. I'm telling you, this is the time. Like, it's very important, guys. This is the time to really take a step back and to truly enter the best trades and be laser focused and to really be aware of what's going on with the Fed, with these meetings, with these speeches and stuff like that, because that's very important too. I mean, I showed you that trade idea, that trade opportunity. We talked about it on stream. How SPY is extremely oversold. It can fill this gap, potentially have a reversal. And then Powell speaks, he starts speaking, and then, you know, the market pumps, right? So we talked about this. But another thing that I have to work on in terms of the call side, it's just buying into that fear, just getting in when, you know, the strategy is looking good. It's at that key level and being a little bit more patient with the calls. I definitely have to work more on my trading in terms of the call side. The put side has been phenomenal. But I have to work on the call side. And that's something you don't have to master both sides All you need is to master one simple strategy. You don't have to master going long and short. You can just master one side of the trade, but you do have to be aware of when to sit out, when to sit out. And then as you're sitting out, you can attempt to adapt and you can attempt to grow on the other side of trading. But from my point of view, I've definitely been best at the put side, but I am starting to recognize it's time to start adapting as well. So my standards are going to go up very, very high, especially for the put side, because right now the market is very macro bullish. So it's about understanding when to make that adjustment and when to, adapt. That's the thing. Traders who don't adapt give back all their profits. You can have a strategy that works, but once the market flips, you have to make the flip with it. That's why you have to learn how to trade both ways. But you don't, you have to learn how to trade both ways, but you don't have to trade both ways. That's what I'm telling you. You have to learn how to trade both ways, when to be bullish, when to be bearish, but you don't have to actually trade both ways. You can just master one side of trading. So I'm going to work on the call side. But since I haven't been mainly focused on calls and buying, throughout this year, I've been doing very well with the puts. I'm going to be scaling back in size. And I'm going to be focusing on overreactions. I'm going to be working on buying into that fear, buying into those big micro pullbacks at that overreaction. Like I showed you with SPY, that was a great buying opportunity, right? That's what I'm going to be focused on. And then, sticking to what I do best with the puts, hitting that with size, but only at key levels, and really taking a step back with the puts and just trading the best ones at the best setups and really laser focused on the SPY and on the VIX. So those are some things that I wanted to address. You do have to learn both sides of the trade, when to be bullish, when to be bearish, but you do not have to trade both sides. You don't have to trade calls and puts. You can just trade one way, right? That's all you need, is one thing that works, but you have to have the awareness, the conscientiousness to really understand, okay, it's time to be bullish, but I don't want to chase, or it's not at the best price, or it's not having that overreaction I'm looking for. So I'm just going to sit on the sidelines. Even though I strongly believe that stocks are going to go up right now, I'm just going to kind of sit on the sidelines and not do anything and wait for something very strategic, wait for an overreaction, wait for an opportunity where I can buy into the fear and not into the greed, into the hype. Look at all of these investors who came into the market and they bought into hype. They bought into the pump. They bought into the greed, pumping all of these YouTubers' channels up. Look where they all ended up. They all ended up stuck bag holding. And now they're just going to be sitting in this sideways shop. And, the market's going to start ripping. But their bag is so big. Just think of all the neo investors, TTC, CF. You guys know all these guys, man. They all got hurt. So we got to start adapting. But that being said, we're really killing it trading. It's just time to start adapting. So yeah, I just wanted to bring some awareness to that. We really got to start readjusting and reevaluating and focusing more on calls. Another one is Ford. Look at Ford. This is wild, man. Look at this. There was a gap to fill on Ford. It's just, these gap close reversals are crazy. I just got to work more on the call side and be impatient. Look at this gap to fill on Ford. $15.51, key support, huge upside potential. That was at $15.51. Look at where Ford bottomed. It bottomed at $15.51. Are you kidding me? Look at the low on this. The low is $15.51. Look at the gap fill. The gap fill is at $15.51. It had a gap close reversal. It bottomed. Now it's at $16.58. And look at the chart. There's gaps to fill above. There's key support. It looks so bullish. And this kind of chart is occurring with several other stocks. So I'm going to be making the shift. I'm going to be looking into some leap call options as well. And with trading, I'm going to be extremely careful moving forward and being more, observant and trying to adapt and finding those new opportunities, but sitting on the sidelines, because it's just like I've just been killing it with the puts constantly nonstop. Things are starting to look very bullish for the macro. So as you're making that adjustment, you can't just dive right in and start buying calls. Like, you got to be very strategic, very aware, very conscious. So yeah, I'm just going to try to be very more observant and just look for these right opportunities, like trading like a sniper. But I'm making like an adjustment with like my whole mind, my whole shift in trading now is to adjust as well. So I'm going to be looking to trade a lot less. I'm going to scale back into size, and I'm going to try to find just the best ones moving forward. I mean, one thing I could say that I did do right in terms of trading today, I really didn't overtrade. I didn't take a hit. My portfolio was only down 1%. I did make mistakes though with the leap options. That's where I went wrong, is with the leap options and not taking the profits on the puts. I mean, I did take off 1/3 of put options on the Bumble, but the other ones took a hit, like Coca-Cola and Kohl's. That those definitely some mistakes made, guys. You got to be very sharp and laser focused with this. But I mean, in terms of the day trades really didn't take a hit at all today. It was just very small, just small entries in and out. I got some DDD puts at like 27 cents, got out at 26 cents. Those dropped to like 19 cents, I think, later on. And then I got some clove puts at 26 cents. I got out, I got in at 27 cents. I got out at 26 cents. And those dropped probably like 22 cents. So I cut my losses fairly small. And like I told you guys, I was on the SPY. I didn't want to play puts on SPY. I stayed away from SPY. I stayed away from playing puts on the stocks that really followed it, just trying some small cap stuff. And I cut para. I had 30% on para left. I sold 70% of it yesterday for like a 30% win. And then I sold what I had left. It was 1/3 of my position, so smaller size left at 80 cents from 106. So it was a red day. My account is down 1%. The green streak has officially ended. But with that being said, guys, I'm looking forward to this price action. I'm telling you, though, I remember 2020 specifically. And when we had big moves on stocks like this, where BIDU with the massive gap up, Alibaba with the massive gap up, when we had these type of moves on other stocks, with huge companies and they were having these massive gap ups, I specifically remember around this time in March, everything ripped and it just kept going. It was sideways trends, some micro flip-flops, but overall everything kept going up from a bigger picture point of view. So I'm starting to gain a lot of interest in some leap call options. I'm very bullish for the macro at the moment. That can change if SPY looks extremely bearish at 446.60, but as of now, that's where it's definitely going to be heading. So the market has officially flipped and it's time to adapt. And if you didn't have this awareness, if you didn't have this education, you would have just been consistently, you would have been blind in a sense. You wouldn't have adapted. So it's not just about having the strategy, it's about knowing when to adapt with the market. I'm telling you, now is the time to really start adapting and to really take a step back, be observant and be very strategic and trade less and start making that shift in your mindset. So that's where I'm currently at within the market. I'm going to be looking for some call leap options. And I'm going to be looking for just big overreactions that make sense to buy the calls where I'm not chasing. And then big overreactions that make sense, like 446, 446.60. It makes sense. If SPY can react as a resistance level at 446.60, the sooner the better, because if it happens sooner, it's more of an overreaction. It makes sense because this was just at 413 yesterday in the pre-market. It was at 413. It's already up. It hit like 437, I think, in the after hours today. There's a gap fill at 446.60. You can see right here, it went from 440.60 to all the way down to 412 in just a couple of days. Point being is, the sooner it gets there, the better for the put opportunity. I also have this theory. It's too early to say. I'll know by Friday morning, but I think Friday could be a great opportunity for some put options. So that's another thing I'm looking into. And I'm telling you, if the SPY can rip to 446.60 on Friday or like, on Thursday, and then it starts reacting as resistance, we're going to see a massive micro sell-off on Friday. That's what I'm potentially looking at. The market does tend to sell off on Friday. It's extremely, prices for the micro have just seen this massive push up. So we're due for some kind of micro pullback. But from a macro, everything is very, very bullish right now. The market has flipped. So that's an idea I have on for Friday. I have to wait for confirmations. I have to wait to see if SPY can even get there. But 446.60 is going to be a level of interest. So guys, I felt it was very important to make this video, and I discussed this. If you watched the video yesterday in the midday, for those of you who stayed to the end of these videos, you really do get rewarded with the information, guys. This is going to be a very important video. For those of you who followed this channel, you're well aware when SPY was in the 470s, I was calling macro puts. I was saying for the macro, when this was in the 470s, I was literally saying investors are going to get hurt very, very badly. SPY is going to reverse. It's going to get crushed. And I explained to you, if you go back and watch my older videos, when I had like 500 subscribers, like just like 500 views, like 1,000 views, like if you go back and watch them, you'll see how I was able to do that. And what I'm telling you right now is it seriously looks like the macro is flipped. Like this genuinely could be the bottom for the year on the SPY. I think one of the biggest variables that's going to be into play, like not speaking for the price action and the technical analysis, is going to be, this whole war, and if we're going to have a World War III and stuff like that. But overall, this looks extremely bullish. This looks very, very bullish, and stocks are going to really rip up. So in my opinion, in terms of calls, I would go with stocks that are oversold. I wouldn't go with SPY if you're looking into leap options. I would go with stocks that are extremely oversold. I mean, Ford looks beautiful. I'm gonna start finding more. Ford looks beautiful. There's a lot of them. I mean, Doc U is looking very, very oversold. That looks great. PayPal is looking very, very great. Shopify is looking great. So there's a lot of them. So those are gonna be the ideas moving forward. I haven't pulled the trigger on anything yet. But yeah, I just wanted to really address this and make this video. So with that being said, if you do want to be a part of, Trader Society, it's going to be the first link down below in the description. So in terms of what you'll get access to for a lifetime access at one-time fee, you'll get access to the live trading streams that we do every single day at Market Open. You get to watch me trade live. You get to ask me questions live on spot. You also get access to the stock analysis and the stock watch list. I post that watch list within the chat room. We review it in the daily live stream, and then we make trades based off of the watch list, based off of the price alerts. It's all premeditated trading that's strategically prepared. And then you also get lifetime access to the gap trading system, the gap trading method, the unique price action strategies that we're able to use to consistently make money and adapt within the stock market. I mean, imagine not knowing when to adapt within the market. What you were doing that could have worked for the past couple months or even for the past couple of years, if you fail to adapt and you're stuck in that same mindset, that same place, you're going to give back all of those gains because you didn't adapt. And I'm telling you right now, like, now's the time to really consider adapting. So yeah, you'll get lifetime access to the education within the gap method trading system, the price action trading strategies that work both ways, the psychology and mindset behind trading, along with the risk management, position sizing. You get access to that video lesson library. You also get access to the real-time trade alerts and the community that we have within Trader Society. This is like the only community that's strategically trading this simple gap method. That's what we're focused on doing, mastering one simple strategy that works both ways. You don't have to trade both ways, but you do have to learn how both sides of the trade work. So keep that in mind. All you need is one thing that works within the market, and then the awareness of when to adapt and to sit on the sidelines. That's it. That's all you need. You don't need to learn how to go short and to go long. You just need to master one craft, but then also learn how to adapt and when to sit on the sidelines. And when is it not time to use that strategy? And when is it time to sit on the sidelines? And then as you're sitting on the sidelines, you can attempt with smaller size or even paper trading to learn the other side and to try to trade the other side as well. But you have to know what works best for you. But yeah, that's going to be within the first link in the description. Once you join, you get lifetime access, and it's instant access. You can get started as soon as tonight, and you can trade with us live at Market Open. So I'm going to leave it off at that, guys. Thank you so much for watching this video. Thank you so much for subscribing and liking the video. And I will see you guys within the live trading stream at Market Open tomorrow.